Hello everyone and welcome. Thanks for joining me, and today I'm going to share with you the update on my Get Rich Slow scheme, which is to have a £1 billion investment account, ideally by 2050, and that would be a 10% per year compounded annual rate of return if I can hit that. I think £300 a month into the account, so let's find out how I'm doing with the latest update. If you stay tuned, you'll find out my best and worst performing stocks because I like to be transparent, and you'll also see the run rate to see whether I'm on track to be there ahead of schedule. We'll start today with the largest stock holdings and the five biggest positions when all converted into a pound sterling value. First of all is Boohoo. Now that didn't appear on this list at all. That's because I averaged out following the earnings results, and you can see that it's now the largest holding overall. Total return is 14% in the negative, but actually that is 13 percentage points higher than it was in the portfolio last month. So the stock has recovered a little bit. It's got back towards that £2 value. My average cost before is also lower. I've had the stock for less than a year, so I don't have a compound annual growth rate equivalent. Second biggest is Alibaba, and that's a fixture in this top section these days. Now, Alibaba's down 8%, but that is 12 percentage points higher than it was last month, so that has moved up significantly. My average is around about $180, so we're not too far away from that at the moment. And actually, I would consider adding more to the position if it did drop in terms of market price towards that kind of 140 range. I'm not sure that it will. We're quite a way ahead of that now, but you never know what's going to happen. And the best performer on this list is Bank OZK. It's had a really good few weeks. It's now at 91% in aggregate, 16 points better than start of October, and the compound annual growth rate there for me is 64%. So the second new one on the list, which has just edged down Aviva and Unum Group, is Tenet Fintech. They've improved 9 points since last month, so I'm just below the break-even mark. You may know them as Peak Fintech. The ticker symbol was PKKFF. So if you're wondering where they come from, that's who they are. This is one of my newest holdings, and unless there's a substantial fall in market price, I don't intend to add to this position at all. And then finally, Corsair Gaming, again a staple of this top 5 list. Level in terms of performance is 12 points down as per last month. They've released their earnings recently. No particularly big surprises because they gave us a warning of that, which is, I think, good management expectation. I've had that for less than a year. And yeah, this is a long-term hold. In fact, I'm using a Corsair webcam here at the moment, Elgato Facecam. So another Corsair product that I've got. I do believe in the company. I think the product's high quality, so I'm very happy that this is a sort of number 5 holding. So the overall view here on these largest holdings, look, there's quite a few reds there. I don't worry about that because Boohoo and Alibaba have dropped down considerably from where they were last year. That's given me the opportunity to build those positions, reduce my average costs, and when they do cover, because they're both growing businesses, then I expect to make a lot of money on those. Right, worst stocks. So on the top of the screen, the 3 worst stocks last time, that's October, and now the 3 worst ones today. The first thing you'll notice is the very worst performing individual stock holding is Huya again, but in terms of percentages, that's recovered from almost minus 43% up to minus 26. So that's my worst performer in the portfolio. And that's not too bad actually in terms of sort of range of performances. TTCF has now entered this category, almost 20% down. And for me, not surprising given what the debacle around their earnings. It could be totally innocent, but it's really poor management to have at pretty much the very last minute cancelled their earnings call. Poor communication as to why. The management have done a few sort of things like this before. So I lost a little bit of confidence in them in terms of how they manage their shareholders. So yeah, one of my second worst performing stock, and the fact that it's only 18% down actually is it's not too bad for a portfolio that's got quite a few stocks in it. So I don't have too many poor performance here. Let's see what happens. Let's wait for this news on earnings, and I really want to understand why this was pushed back. I'm really keen to see those results. And Baidu, third lowest. This is a position that bigger sellouts of if I can get back to even. It was too small to be consequential. And yeah, there's almost no point holding that position in terms of its size. So that will be gone if I can get us back to with the green on that stock. Now you can see Voyager Digital was actually there last time. I'm now up around about 30% on that. It's had an amazing couple of weeks. I'll probably have to look at their earnings perhaps in a future video. And crypto's increased as well. So those two factors have really pushed them forward. Boohoo we discussed a moment ago. So things can change pretty quickly, even in relatively large portfolio. And the best stock, so it's the same three again. Percentages broadly similar, I suppose. Alpha actually did touch 700% 2 or 3 weeks ago. It's pulled back a bit. I still think there's a long way to go on this. And Ramaco actually touched 300%, and that's pulled back a bit since their earnings. Bit of a shout out here to Immo, that's hit the 200% club, as you can see from last time. So 168, that's 220%. Really pleased with that performance. So 3 really strong performances there, which I'm very happy with, and I'm going to continue to hold from each of them. There is more to come. Just a quick shout out, I do have a Patreon page, the link is below. If you're considering perhaps helping out the channel, I'd really appreciate that. You do get something for your money there. You become a VIP supporter, and you'll get direct access to me. You'll start doing kind of monthly Skype calls. You'll be able to get access to my budgeting spreadsheet. We do look at some stocks on there and discuss strategy and share information. VIP supporter cover, of course, you get your name shown in the videos as well. So please consider that if that's of interest to you. So what you've been waiting for is the latest position, well ahead of the year-end targets. So to get the stretch target 10% a year, I should be at 32,000-ish by the end of the year. The current value portfolio is £42,997. Now, compared to the start of October, that is £2,500 higher. So it's had a really, really strong performance. They've only put £200 of extra money in, so pretty much all of that is investment performance. There's been a lot of strong performers that have pushed this forward, but I'm really happy just in a month, or perhaps 6 weeks or so, to add 2,342 in investment performance and another £200 of my own money in. So absolutely delighted with that. There'll be another £100 going in December. Therefore, the expected year-end value is £42,097, which is £2,342 more than start of October. So well ahead of in terms of where I needed to be this year for the stretch target. So 2050, so 29 years' time, is if I get 10% a year on the original balances. I'm going to have a quick look now to calculate how many years I've actually got to hit that £1 million, assuming £300 a month, again going forward, and then the 10% a year return. So popping over to the screen here, and click calculate on the calculator.com, useful calculator here. We're looking at hitting the million in 26 and a bit years. So let's round that up to 27. So 27 years, that is the same as it was last month. Yeah, that's a couple of years therefore ahead of schedule. But get rich slowly, I think, is a safer way. And yeah, I'd love to get rich quickly. I'd love to have it all in next month or in 2 years' time. But the amount of potential risk might have to be taken to achieve it that quickly. I don't know, or indeed concentration in certain stocks. I don't have that level of confidence in my ability to go to, let's say, 80% in a stock. It's the sort of thing where if you went in Tesla 80% or more 3 or 4 years ago, that's the sort of thing that can push you, 10 years forward in the portfolio. I'm trying to be more realistic with my approach so that, yes, I may have stocks that perform well, like some of the cold stocks we just saw, a bit more diluted. We're not talking hundreds of stocks, but then I'm not going to lose my face, so I shouldn't fall off that trajectory as I go forward. So Boohoo's my largest stock, and if you look on screen now, there's an analysis of their most recent quarterly results. Please click to take a look.